So there's this interesting thing, which you may realize, which is that stocks can get halted. So what does that mean? A stock can get halted. So a stock can get halted, and when it's halted, you cannot buy and you cannot sell. You're just stuck holding the stock. Sounds a little scary. And it is at times, but there's only a few scenarios where a stock will get halted. The first is pending news. And so for the different types of halts, there are different codes associated with the halt. And this is, of course, helpful because and I'll just pull up the website here, for instance. This is the NASDAQ website, and you could bookmark this if you want. NASDAQ Trader, well, you could see what the link is. I don't have to read it. So anyways, so this has a reason code. So we have different reason codes, T12, LUDP, etc. And that will help you quickly understand what the halt code is. So interestingly, on the Amex market, they actually use different codes than on the NASDAQ market. So but we'll cover that in a second. So T1 is halted pending news. So if a company, typically when companies release news, they release it pre-market or after hours. They don't usually release news in the middle of the day, but sometimes they do. And if they do, they can contact the exchange, whether it's New York Stock Exchange or it's NASDAQ, and they can say, please halt trading in our stock. We're getting ready to release material news. You know, oftentimes when that happens, the news is not great. But sometimes they do release good news in the middle of the day, and then when stock resumes, it will often start surging up. We'll talk about why stocks can sometimes gap higher in a moment. So T1 is halted pending news. T12 is halted pending SEC or the listing exchange suspending trading of the stock, typically due to an investigation or a request for more information from the company. So sometimes when we see a stock is up 200, 300, 400, 500, 1,000% with no news at all, the exchange will halt trading and they'll contact the company and say, hey, what's going on with your stock? Can you please respond to this price action? And they'll usually respond that they have no idea what's going on. And when the stock resumes trading hours later, or maybe even days later, it usually opens quite a bit lower. And then we have code LUDP, also known as LULD, also known as circuit breaker halts, also known as volatility pause halt, also known as code M here on NASDAQ, a volatility halt. So what the heck is that? Well, this is very interesting. So stocks of different price ranges have different halt thresholds. But this type of halt, which I will traditionally call a circuit breaker halt, that's what you'll probably hear me say the most often. A circuit breaker halt happens when a stock moves more than a certain amount in a certain period of time. We'll break it down a little bit more in just a moment. So to check for halts, as you know, we have scanners that run in the chat room right here. This actually is, these are the stocks that have been halted today. There's 1, 2, 3, 4, 5, 6, 7 of them. And so you can see, at 10:38, this particular stock was halted. So let's see, that was PRQR. Okay, so this stock right here is currently halted. There's an H right there, which signifies that it's halted. And I cannot buy shares of it, and I cannot sell shares of it. I couldn't do anything. It's halted. There is no ability to trade it. Let's see, let me open my chart, and let's just look at the chart on it. So PRQR, looks like this surged up and got halted right there. So it squeezed up and got halted. Now the reason it got halted is because it went up more than that certain amount in that certain period of time. So again, let's get back into the slides and talk about what those thresholds are. Well, before we do, let me just, I jumped ahead of myself here by showing you the halt, the H. But you can see right here how this shows an H for halted. These two stocks are both halted. And if I open up the simulator, let me just open up the sim real quick, see if I can get in there before PRQR resumes. So let's see, PRQR. So PRQR is halted, and right here it says halt. See how it says halt? And you can't buy and you can't sell when the stock is halted. You just have to wait. All right. Now, something that's worth mentioning here just for a moment, something kind of interesting happened this past year where we noticed that stocks that were listed on the New York Stock Exchange were doing something a little different from stocks on the NASDAQ Stock Exchange. So I'll just read this for you. Recently, the New York Stock Exchange, the listing exchange that manages NYSE and Amex stocks, has halted stocks up significantly. 300% was the lowest gainer I recall being halted recently with no news. The others were even higher with no news. So stocks up significantly with no news on the NYSE exchange or Amex exchange now have a risk that the exchange itself will halt them, and they request the company comment on the move. And the company typically says, if there was no news, that there is no news to account for the move. I've got to fix that typo. For the move. And the stock typically drops 50% on resumption. So when you have a stock that's squeezed up 25%, 30%, 40%, 100%, 200%, 300%, 400%, whatever it is, and then all of a sudden is halted by the exchange, anyone that's in it panics. And when it does resume trading, people bail out and you get that big drop. So this trend has been isolated right now to NYSE and Amex listed stocks. NASDAQ stocks have not had this issue recently, although that could always change. Trading stocks with no news would likely eliminate this risk, but no news short squeezes can be powerful as short sellers continue adding to the short as the stock really has no reason to be going up. And that was the case with ACY as it squeezed from $7 to over $38 a share. It presented a very clear opportunity, but it was with no news, and it did end up getting halted by the exchange. So, despite this risk, just to go back here, I will still occasionally trade NYSE stocks with no news, but I do not hold during halts because what they have done is while the stock is halted on a circuit breaker, they change it to halted pending news. And then they don't, basically it then is halted for a long period of time. So here's a couple of examples. This was a no news squeeze on BDR. So the stock went from $1.60 to $3.80. It then got halted right here. It was halted by New York Stock Exchange, and you can see NYSE was the listing exchange. And they requested that the company comment on the price action. And the company commented today on recent price action that they know of no reason for the recent increase in price and trading volume in the stock. No material developments or change in circumstances with respect to the company's ongoing business activities since the company issued its second quarter earnings release on August 7th. Here's another one. MDLY squeezes up here from $1 all the way up to just under $3, then halts going down, and then halted pending the New York Stock Exchange requesting information from the company. And again, while the company does not normally comment on market activity, the company confirms it's not aware of any undisclosed material change in the business operations or affairs that would account for the increase in trading activity. And here's a big one, RHE. This went from $1 to $16 a share. No doubt providing clear and powerful opportunities. And on this day, I was actually up $185,000 trading this stock and one other. But it did at the top come back down, and I was holding it, and I finished the day up about $118,000. I lost, $45,000, $50,000 off the top. So in this case, let's see. This is again the same exact headline, and this was on UU again, almost the same exact headline, and this was on ACY. This incredible move from 8 all the way up to almost 40, and then the big drop. So that's something that it's important that I educate you on, and that you're mindful that if you pull up a stock and it is a NYSE or Amex stock, that there's more risk in that trade. So while circuit breaker halts are our favorite halts, our least favorite would certainly be halted pending news or halted on a T12 by the exchange. On Sterling, you can see Q right here means NASDAQ. And let's see, what's an Amex stock? RHE is A for Amex. And ACY is A for Amex. I'm trying to think of a NYSE stock, NYSE listed stock. MDLY is N for NYSE. All right, so you can see that right there. Over on my platform, NASDAQ is just right there. And then RHE is Amex and MDLY is NYSE. For reference, you can go in here to design and layout, and you can add the exchange. You can add a lot of different data fields, like here and et cetera, but you can add the exchange there if you don't already have it. So you do have to manually add that on Lightspeed. you don't have to do it on Sterling. And you can also always Google a stock, you know, RH, let's see, I'll just do it over here, RHE stock. And when you Google it, it's going to say NYSE, and it'll tell you right there what the exchange is. So that's another easy way to check. So, but it is good to double check. Now, our favorite type of halts are circuit breaker halts as a day trader. The number of circuit breaker halts in one day can be a good measure of how hot the market is. Similarly, a large number of stocks making 50 to 100% moves is certainly an indicator of a hot market, and those are typically stocks that will get halted multiple times. But let's talk about exactly what those halt thresholds are. Okay, so the way it's broken down here are by tier 1 and tier 2 securities and by price. So we are typically trading tier 2 securities. We're not trading tier 1 securities, which are those would be your large cap, big board companies that almost never make big drops. So they have tighter thresholds. So a tier 1 security, let's see, above $3, the price band is 5%. Okay, so let me get my drawing tool for 1 second. Okay, so if this is the price, let's say, you know, $70 a share, and you're talking about a large cap stock, the band is always going to be moving 5% above and 5% below, right? So in the case of a $7 stock, that would be down $3.50 or up $3.50. And those are the volatility bands, okay? So if the stock immediately surges up to the top of the volatility band, it's going to hit that level. And because there's a volatility band there, the stock will not be allowed to go higher. If it holds at this price for more than 15 seconds, the stock will get halted for a minimum period of 5 minutes. It gives traders the opportunity to take a breath and collect themselves and figure out, why is the stock up 5% in the last 2 minutes? Now, because these volatility bands are constantly changing, a stock could go up 5% over the course of a day and never get halted because it makes slow moves. So if it slowly goes up to 72, well, by the time it's gotten to 72, the volatility band has moved 5% above that level. So these volatility bands, they're essentially a moving volatility band that is based on the average price. And again, I encourage you guys to take some notes. The average price of the stock over the last 5 minutes. And it's a rolling 5 minutes. So it's always changing. All right. So that's a tier 1 security. Now, a tier 2 security, which is mostly what we're trading, the volatility band is 10%. So when we're talking about a $7 stock, if it goes up to $7.70, we would be at a halt up. And if it goes down to $6.30, we would be at a halt going down. Those are our volatility bands. So again, 10% up or 10% down based on the average price of the last 5 minutes. Tier 2 securities price between 75 cents and $3 because it's not uncommon for a 75-cent stock to squeeze up 20% in a few minutes. Or 10% in a few minutes, they increase the band to 20%. So essentially, lower price stocks, they give a little bit more room for volatility, which is important. And then we have stocks below 75 cents, and they're actually a 75% band or 15 cents, whichever is the lesser of the two. But you really never see me trade 75-cent stocks, so you don't have to worry about that too much. Sorry, I just backed out of this. All right, so let's go back into here. All right, now what's interesting is that these volatility bands, as you can see here, occur from 9:30 a.m. until 3:35. But between 3:35 and 4, the band percentages doubled during these times. All right, now it used to be the case that the band level was doubled also between 9:30 and 9:45 to accommodate the increased level of volatility at the open. And then that ended up, they changed it. So right now what we know is that most stocks that we're looking at, which will be a tier 2 security, will either be in the 10% or the 20% range. So now, let's just pause for a second. This initially might be a little confusing. I want to see if anyone has a question on this in the live classes that I could answer that might help anyone that's watching this on the archived learning management software version. I could understand initially how it could be a little confusing because it's like, what is this? What is this stuff? So Christopher says, currently RHE is halted on a code M. Code M, as I mentioned just a moment ago, is the equivalent of on Amex of a volatility halt. Yep, so it's a volatility halt. So Rod says the stock that we trade today, which is BBIG, didn't get halted today. So BBIG, we can pull it up for a moment. So BBIG, the current halt prices, and I have this as LULD, remember limit up, limit down. So this actually shows right here on my trading software where the volatility bands are. And it shows on Sterling as well, LULD. TD Ameritrade, E-Trade, and those brokers, as far as I know, do not show you that price band. So this is an indicator which is really nice to have because it tells you, how close the halt levels are and gives you a sense that the stock may be about to get halted. So on this one, well, it appears that the volatility bands are 20% away. Now, even though the stock is currently at $6, let's look at the price of it yesterday because it's based on yesterday's price. BBIG yesterday was below 3. Therefore, it's 20%. Okay, so it's gapping up today, made a big move, no doubt, but the volatility bands are 20% away. And you can see how they just moved there, 794 and 530. Those are the current bands. If we look at a stock like, ACY is a higher price stock, the volatility band is 10% away. It's closer, 772 and 714. Because it opened at a higher price. So the volatility bands are 10% on this stock. And again, just as a quick how-to guide, in the Sterling platform, whether you're using this in production or you're using it as a simulator, whatever the case is, if you see what I just did there, I went from view and I went down to settings. And I went to level 2 and highlight specific market makers. I check this, I click on that button and I said highlight LULD. For all symbols, not just for one symbol, asterisk for all symbols. I click OK and I say make it red because I want to see it. Now you can make it white with red text or red with white, however you want to do it. But you can see it's important to notice those levels. Over on Lightspeed, it's essentially the same process. Highlight all stocks, LULD. And then we add that and you can choose the color you want. So let's jump back in here. It doesn't sound like there were any super specific questions. So, I didn't want to see my P&L today, but now I see it. So where did I finish today? 47,000. All right. Well, because I took the tape away. Well, that's okay. That's a great day. So, all right. It is what it is. So, because I pulled the tape back so I could see what I had on my slide. I've been doing this exercise for those watching this is an archive of not looking at my P&L just to trade the market and just not focus on the dollars, just to focus on good trades, but it's okay. So, all right, so how are the halt prices calculated? And this is what I had just explained for you. It's based on the average price over the last 5 minutes. Therefore, the halt levels are constantly fluctuating, and we can see them right here on our chart, or on our level 2 window. Again, for those that have never seen level 2 and you're still trying to catch up on some of the things I showed you yesterday, don't worry. There's an entire chapter of the starter class dedicated to level 2. And so, you may, and it's totally okay to rewatch some of these classes, two times or 3 times as you need to really get this to soak in. So once you rewatch this a second time, some things may make more sense having continued a little bit further into the class. So how do I know a stock is halted? H or the halt down below, and I have a scanner running for Warrior Pro students that searches for stocks currently sending out that halt code. So the moment the stock is halted, a halt code will be received by my scanners, and that'll let us know the stock is halted. Most of the time when stock is halted, if I'm not already in it, or if I'm already in it, I can see it's halted or about to get halted due to the LULD halt displayed on the level 2 before it halts. We'll cover that in a bit more detail. So now the question is, when does the halt level resume? So when does the halt resume? So circuit breaker halts are a minimum of 5 minutes long. They'll never be shorter than 5 minutes. A circuit breaker halt is always at least 5 minutes, although sometimes they are longer. So if a stock is halted, therefore, at 9:42 and 1 second, tell me what time it's going to resume. The answer is to add 5 minutes, and it's 9:47 and 1 second. That would be the first possible resumption time. And then this was an example here that I gave, not based on this chart, but as a halt time here of 9:44 and 4 seconds, the first possible resumption would be 9:49 and 4 seconds. If it's a 10-minute long halt, so if it doesn't resume in 5 minutes, it's immediately 10 minutes. Then it's 9:54 and 4 seconds. If it doesn't resume in 10 minutes, it goes into 15 minutes, 9:59 and 4 seconds. And I've heard anecdotally that people say that any halt over 15 minutes can open at any time, but typically they still open at 5-minute increments. So I'm not totally sure what the situation is on that. Maybe there have been some times where stocks did just sort of open at a random time, but a stock can be halted on a circuit breaker for over an hour. Typically, when stocks are halted longer, they gap higher on the resumption. So we'll talk about that for 1 second, and I'm going to show you an example here. Let me just pull this up. I want to show you this example of what we would call a distinctive pattern. All right, so let's go full screen on this. And what we have here is, we're going to have a stock that's about to get halted. Let's see. I believe it's MTSL. So you can see in this level 2 window right here, MTSL is currently halted. So let's go back to before it halted. Okay. So watch this. So MTSL is hitting a scanner right there. I pull it up, and as I pull it up right here, it's currently trading, but look, LULD right there is at 184. And it's also 184 on the bid because the bid is right at the volatility band. So the way this works is that if the bid price stays at the volatility band, which is 184, for more than 15 seconds, the stock will halt. Now there's 2 risk factors here. Number 1, potentially, if a big sell order goes through, then the stock could drop back below 184 and does not halt going up. And if that's the case, other people who may have bought anticipating a halt going up and hoping it would continue on the resumption in 5 or 10 minutes might stop out. And so we would sometimes call that a false halt. Another risk factor is that if it sits here for 15 seconds, that during that 15-second time, it's possible that that could correspond to the end of the rolling 5-minute period, and the stock halt level suddenly moves up to 195. And then 2 things will happen. Either the stock surges right to 195 because there's still enough people that want to buy it, or people panic that the halt didn't occur and the stock drops. Now, the reason people would panic is because there's a lot of traders who buy stocks halting going up, anticipating they'll go higher. That is a strategy that we will talk about in the Warrior Pro classes. It is specific to trading around halts. So let's look at this stock here. So I'm going to resume this. So now we've got our 15-second mark. Now this is a distinctive pattern. See how the bid is stacked up there? This is almost definitely going to halt. There are some sell orders going through at 184. That's common because no one can actually buy the stock at any price above 184, and at that moment it just halted. So let's go back and just replay that real quick for you. This is something that you're going to start to get really familiar with. So MTSL, it's not halted yet. You could put out an order to buy here, and you might get filled at 184 if one of these people sells you shares, but usually as it's going into a halt, it's very hard to get filled. So now it's halted, and look at the current price. It's showing 190. So it's, while the stock is halted, if it's a NASDAQ listed stock, and this is a NASDAQ listed stock, while it's halted, it will show you where the current price is. So how does that work? Okay, when a stock is halted, while you cannot buy and get filled, is there a stock halted right now that I could do this as an example on? RHE? RHE is halted. Okay, well, but this is an Amex stock, so that's not going to work. So on NASDAQ stock, Amex shows you nothing when the stock is halted. It shows you nothing. You don't know, it shows you absolutely no information. But NASDAQ stocks, which is another reason we prefer NASDAQ stocks. When the stock is halted, it shows you the current price. So see how it's jumping around here, 187, 188. For a second, it was $2.08. So let's just watch this. 192, 205, 214, 218. So someone's putting out a sell order. So while you're not able to buy, what you can do with certain brokers, and Lightspeed, which is the platform that I trade with, is one of them, XOG halted. So XOG is halted here. So, okay, this is a good example. So let's just look at this for a second. So XOG is halted. I'm just going to bring this up here like this. So this is the view I have, which is why I can't see my P&L. So XOG is halted. So let's see what the halt time was. The halt time was 10:59 and 53 seconds. The current time, so we still have about a minute. So what I could do here is I could put an order for 100 shares at $32, let's just say. And just like that, I now have an order at the market at 32. So I'm going to cancel that order because I don't actually want to get filled. But the second this resumes trading, my order could fill. And so if, let's say, I put an order to buy 10,000 shares at $34 or whatever, then you would see probably that the price would start to move up. But there's obviously some people that are going to put out sell orders. And so what the computer system of the market has to do is it has to figure out how many buy orders are out there and how many sell orders are out there. So let's say going into the halt, you're trading with TD Ameritrade or E-Trade, and you pressed a market order to buy 10,000 shares going into the halt. Well, now the stock is halted, but you've already sent the order. So the computer systems that match these orders, which are the market makers and the ECNs, they basically have to process an imbalance. So watch here. So this, we're going to look for resumption here. It's not resuming yet. This is a 5-minute long halt. So we're going to go into what appears to be a 10-minute long halt. It is still halted. It's on very light volume. So that's whatever, it's fine. We could just look at RHE here for a second. RHE was halted at 57. So RHE is already a 5-minute long halt. It's going into a 10-minute long halt. And over here we've got, you can see XOG halted LULD, or LUDP, volatility pause. Okay, so what the market makers have to do in order to resume trading in the stock, in the security, they need to open it. So what they need to do is they need to match all of the orders that are out there while the stock was halted. Okay, so this ended up resuming at an unusual time and resuming a little high. And see the halt level here is 35.19 and going down is 28.79. Why that resumed at a slightly unusual time, I'm not exactly sure, except that this is a very light volume stock and perhaps, I don't know. Again, there's some irregularities and we don't always know why that's the case, but because it should have been right at that time. But anyways, it just is the way it is sometimes. So it's not always an exact science. But now watch the buy orders there at 32. Halt levels 35.19. See that halt level's right there. Right? Now if this breaks over 32, then 32.12, 34.12, it's not going to take much on a light volume stock like this to go to 35.19. And if it did get up to that level, we would probably see that it's pinned at that level, and then we would see it's getting ready to go into another halt. So I'll just put that down there, and let's just look back at MTSL, which is currently halted in this video. So we're showing right now approximately what the resumption price is going to be. We know it halted at $1.84. So what this is showing us right now is that it's halting going up, and it's going to gap higher. The majority of the time, stocks at halt going up open higher. Stocks at halt going down open lower. So for that purpose, for that reason, there's a lot of traders, me included, that like to buy stocks halting going up so we can basically benefit from the gap and then add for the next move higher. And we've even seen stocks halt multiple times in a row going up. I mean, we've seen stocks halt four or five times going up because they squeeze up 10%, they get halted, they gap a little higher, and then from the open, they squeeze up another 10%. And just for reference, look at this, 35.19. But this will not halt until when? Remember, it won't halt unless the bid price, the bid is on the left where the buyers are, the bid has to stay above 35.19 for this to get halted. So this will not halt unless the bid moves up. So while it's at the halt level on the ask side, it's right at that volatility band, you've got a huge spread, and it's not going to halt unless it moves higher up. RHE resumed, it looks like. The halt level is 502. It's up 45%. So, this one's catching a little attention here, but we'll just leave that there for right now. If it looks like it's going to halt, I'll pull it back up so you can watch that distinctive halting pattern. So on this example here, the halt time was 10:20, so resumption is going to be in about 1 minute. So let's just fast forward 1 minute. Okay, so we're watching this for resumption, and we're showing 185 by 205. So it's not actually looking like it's going to be a big gap on the resumption, maybe a slight gap. But look at the chart from $1.40 to $1.84. It's breaking through the 200 moving average. We'll talk about that a little bit later on. And I'm moving my order up to 204. See that? I'm getting ready to buy on the resumption. There's the resumption. Now in this case, it actually ended up opening about flat. In the Warrior Pro classes, we'll talk about this strategy, but the entry here is $1.84 for the break of the high day. So there's $1.84. I got in a little high at 96. And now where's the next halt level? 208. Watch the distinctive price action up here. So it pops up to 208, it pulls back. LULD has now moved up to 218. I add back there at 203 for the breakthrough 208. So I'll just pause this for a second. We'll resume it here. Generally on something like this, the way it's straddling the whole dollar, we don't usually love, but again, not to get too far into strategy right now. So taking a little off the table there just to be safe. You can see there's a seller at 205. The halt levels have moved up a bit. And boom, it broke through that seller. So we're on a 1 minute micro pullback here with a high of around 210. It will halt again. I already know that. Watch over 210. So we're going to look for the break of 210. See, I put my candle there, and my candle shows me that when I put my mouse on it, the high of that candle is 213. So seeing 213, I like to see that high because I know, okay, if it breaks over 213, it's going to be breaking to new high a day. Some of you may realize this, but brokers like Robinhood and several others, E-Trade, Ameritrade, a lot of these brokers have scans that are constantly showing you stocks hitting new highs. Some people have criticized Robinhood on this a little bit because some people have been critical that they make trading kind of like too much of a game or too much of like a casino trying to catch your attention. But it does catch people's attention. It does probably generate more trading activity by people seeing these stocks. And so when we see stocks hitting new highs, we know that we're not the only ones that are going to be seeing it. It's going to be seen by a lot of people, especially when it is up 86% and has these characteristics that start to really get people interested. So I might be a buyer over 10 to anticipate the breakthrough 13 and then look for more volume coming in through 15, 18, 20, and so on. So right now I'm just watching it. I'm waiting for green on the tape. This is the level 2, which is we call the tape, and it shows every transaction that's going through. And these are all red right now. But I have my hand on the buy button. My mouse is on the buy button. And there's some green right there. Now there's some green coming in. Watch this. I see that, recognize the strength. Now we've got 210, 213. Now it's hitting new highs. I take a little off the table. There's two ways to trade it. You could take money off the table or you could add to the position. Pulls back just a little bit for a second there. So let's move a little further forward up to the next halt level. So the halt level on this, let's see, so we had a high of 218 or so. So it pulls back for a moment, and then all of a sudden it surges. Let's look at that surge. So all of a sudden, as it breaks through the high a day, now traders get excited. It's hitting the new high. There's 27, there's 28, there's 30 on the ask, 38 on the ask. I'm adding at 38. LULD is at 252. I'm adding up here. LULD is at 252. There's 245. There's 252. Now we're at the halt level. Okay? So 252, and it's holding right here. It's pinned, we call that kind of pinned, right at that volatility band. So now, let's just back this up, we're gonna start that 15 second clock. When the bid 1, 2, 3, 4, 5, 6, 7, I'm probably counting too slow, 9, 10, 11, 12, 13, 14 and a half, 14 and 3/4. And now it dipped down. The bid dipped down back to 243. Okay, so it dipped down. Now that 15 second clock is going to start over the next time the bid is at 52. Look, the halt level right now just moved LULD up to 261. For those that are feeling like, whoa, man, this is getting a little crazy, I'm feeling a little overwhelmed. Remember what I said yesterday. That's natural. That's part of the learning curve. It's okay to feel that way. You will start to understand this more and more the more times you see it. It's learning a new language, and it does feel at times a little confusing, but it'll click. All right, so now it's squeezing up. Okay, so now 10 second timer starts again. 1, 2, 3, 4, 5, 6, 7, and then it dipped back below. So clock starts over. Halt level's at 61. Halt level's still there at 61. 1, 2, 3, 4, 5, 6, 7, 8, 9. This is looking good. When it stacks up like that, when the bid stacks up like that, that means there are so many people trying to buy it that it's almost definitely going to halt going up. So now I have no question that this is going to halt going up. Boom, it's halted. And now as it's halted, you'll start to see it break up and show higher prices as the market makers are now trying to figure out what the resumption price is going to be. So it says now $3. Look at that. Imagine if this opens at $3, right? If this thing opens at 3, now that's pretty exciting. Now we're talking about a big gap. We're talking about nearly a 20% gap if it opens at 3. And we've seen 20% gaps. Now, there are times during halts where the level 2 will be crossed here, where the bid is higher than the ask and stuff like that. I don't think it's going to open as high as 3, but they're just kind of initially sort of order. It just moves around a lot, and so initially, until we get closer to the open, we don't really know what it's going to do. So the halt time on this, 10:32 and 17 seconds. Resumption, add 5 minutes, 10:37 and 17 seconds. So let's jump forward here. So we're going to jump forward another minute or so. Let's back up. Okay, so we've got right now about 10 seconds to resumption. 9, 8, 7, 6, 5, 4, 3, 2, 1. Now here's the problem. This is actually showing a slight gap down at 35. But that's kind of what it did before. It gapped down slightly and then surged higher. So now the ad spot is through the highs, but it's not great that I have a really big position. I'm only up $165 on it, and it's opening break even. But let's just see what it does. We're looking for the breakthrough 61. Okay, orders at 75 to add. There's 60. We want to see it break 61, which is high a day. So this takes the form of a pullback, micro pullback. We'll talk about that in the classes in more detail. There's 60. We need to see it break 60, 68, 78. Look at that quick snap. Now traders are jumping in. There, I take a little off the table into that squeeze. Now, is it going to go to 3? 78, 70, 67. Some sell orders go through, 51, 59. Now it's a red, well, it's a green candle now. It could be a red candle. We know that 1 minute candles close at the top of the minute. So this candle, based on the clock, has about 15 seconds left. And look at that nice surge up to 84. Okay, now we're starting to look like we might see a move up towards 3. You'll learn that stocks trade around $0.50, whole dollars, and cheaper stocks between 2, 225, 250, 275, and then 3. So breaking over 75 and holding over that level, the next target becomes $3. Seller there at 80, 17,000 shares on the ask. Again, those that are saying, well, wait, that shows 25 shares. We add 2 zeros. We'll talk about that when we get more into level 2, but it's just the way they're abbreviated. So 170 there is actually 17,000, adding the 2 zeros, 17,400. Okay, so is it going to go into another halt? We're looking at our daily chart, kind of breaking down the setups here. What's our next target? We've got room. So we're going to move a little bit further forward, and here it's coming up through 87. The halt level is a little on the higher side. It's not showing here, so it must be above 312. Okay, so there's 85. You see a 10,000 share seller was there at 90. So again, this is not meant to really get too deep into strategy, but more than anything just to show you that distinctive halting pattern. Because no doubt, while you guys are going through the classes, you'll be watching me trade in the room, and you'll see days where I'm trading stocks that are halted. So when we have stocks that make really big moves, it's always because of that. It's usually the sort of that imbalance. So this is the distinctive about to halt appearance. The level 2 is pinned at the halt level. The bid and ask are the same price as you see right here on SCPS. Now this is a little bit iffy. Right here you could see, well, okay, the bid, but there's only two orders there. So we know that this maybe has a little more risk, especially with light volume, that it does a false halt and drops down. But this one's almost definitely going to halt going up. Again, false halts during that 15-second time frame. I've already discussed this, but this will be helpful for you to have in the PDF of this class, just reiterating what I had just mentioned to you. So again, typically stocks that halt going up open higher, and look at this. This stock squeezes from 3 to 4 to 5. It halts right here at about 495, and my entry was at 490 based on an alert on the scanner. It then squeezes up to 7 and gets halted a second time. It opens and squeezes up a third time and gets halted again at 11. It then opens and halts, let's see, once, twice, 3, 4th time at 1396. Then, off of that high, enough people sell, some short sellers step in, and it drops and halts going down once. It opens lower, halts going down a second time. Then it bounces off that low, comes up, a little short covering, sells off more, and then later in the morning goes from 8 all the way back up to 13. Here's another one. This stock at 4 squeezes up and halts, going up about 450, then halts again at 6, halts again at 8, halts again at 10, halts again at 12, taps 14, halts twice going down. So these are some of the most volatile stocks, seeing multiple halts going up, multiple halts going down. You'll see a lot of examples of these both daily in the chat room while I'm trading, and you'll certainly see them as we go through the curriculum, because ultimately this is volatility. Now, as you probably would imagine, trading stocks that are halting can be a little challenging, just because when they are actually halted, you can't exit your position, so you have to sort of anticipate, okay, how much higher is it going to go? You don't want to be caught holding at the top, because these, when they drop, this went from 14 back down to 8. So you have to be a little careful with how you trade them, but clearly within this volatility is opportunity. And when this is the most obvious stock on the day, traders all around the world are watching it and trying to capitalize on the opportunity. And so that can certainly give you the chance to produce some really big winners. I would say probably, and this is just anecdotally, but I would say probably my biggest winners are on stocks that did halt multiple times during the day. It would be uncommon for me to have big winners on stocks that didn't halt, although today, and again, you know, I guess I already saw my P&L, whatever it is up here, BBIG actually didn't halt. That one was just at a price where we didn't get halts on it. So, you know, sometimes you'll end up having some nice profits on stocks that don't happen to halt, but usually the big winners are on stocks that have multiple halts. They gap higher. So, you know, you buy into the halt going up. Next thing you know, it opens higher and keeps going, and you're up 25% just like that. And you're like, this is amazing. So, again, the Warrior Starter class is not about teaching you the strategy. Strategy development is in the pro classes. The starter class is about teaching you sort of the mechanics of the market, how the market works, and circuit breaker halts is an important mechanism that you need to understand. You can certainly capitalize on trading stocks that are halted. You can also certainly lose money on stocks that are halted, especially if you're not aware of the differences between NYSE stocks and NASDAQ stocks, and or you're buying after a third or fourth halt going up and then you get caught in a halt going down, because sometimes they halt so fast that there's not an opportunity to unwind a position. And when I had that big drop on RHE, it dropped so fast I didn't have a chance to get out. And but that was also my fault for buying as high as I did, and I could have been more cautious there. So I just showed you the example, and again, reiterating that the strategies around trading halted stocks will be discussed extensively in the pro classes, but certainly in a simulator, whatever simulator you may be using, you're welcome to practice trading stocks halting going up. But you'll notice that it's not just as easy as buying every stock that halts going up or it looks like it's about to. There's a little more to it than that.